just give me a window into what you've done in the last 8 weeks to try and shift your business as we all go to the grocery store and as all restaurants seem to close down.
Sure. Yeah. Good morning, Alex. We appreciate your having us on this morning. And I think it's helpful first to give context to who we are. At Sysco, we're the largest food service distribution company in the world. But our business is what we call food away from home. So everything other than what you see at the retail grocery store. So we serve restaurants and hotels and concert venues and schools and government buildings, et cetera, et cetera. It's in healthcare facilities. So it's everything other than the retail grocery stores. And as you just indicated, when the pandemic hit and the shelter-in-place orders took place, a huge imbalance happened in the supply chain. Pre-COVID-19, roughly 50% of food was purchased away from home and 50% was purchased in the home. And that tilted meaningfully almost overnight. The hotel business has been the hardest hit. And the restaurant business, as you just indicated, was the second hardest hit. Yesterday in our earnings call, we announced our total top line sales were down 60%, at the trough or at the bottom of this COVID-19 crisis. So what we did is what you just described, Alex. We needed to pivot ourselves to be able to support the grocery supply chain, which was under tremendous constraints and pressure. So things like we've shipped hundreds of truckloads of product to retail grocer partners. We've lended labor to retail grocers. We've actually become a supplier for smaller regional players. And we've even stood up our own direct-to-consumer business, something we've never done before. We're selling premium meats now direct to consumers' homes through 2 websites, one in Canada, Sysco at Home, and one in the United States on something we call onthefly.com. So I can tell you more about it, but that's a quick highlight of where we've been over this last month.
So that's a pretty quick pivot. What happens if we pivot back? If we reopen, restaurants go up and running 100%, how quickly can you go up and running 100% back to the old model?
It's a great question. I mean, we're a supply chain company, so that's the business of our business. That's literally what we do for a living. And Alex, we do expect for the business to pivot back. People want to eat away from home. We call it food at home fatigue. People are tired of cooking 3 meals a day and washing dishes and those types of things. And just the general experience of being able to go out to eat, to celebrate a birthday or have a business dinner, et cetera. And how quickly that recovery takes place is subject for much debate. We're working through many different scenarios on what that recovery curve will look like. But we at Sysco, for sure, will have the financial flexibility and the supply chain prowess to be ahead of that curve. Others are going to struggle with building inventories during a time of financial constraints. We have $6 billion of cash and liquidity on our balance sheet. That will afford us the opportunity to be ahead of that recovery curve, to position inventories in fresh product categories, protein categories, produce, dry goods, and the like. So we're prepared for it. We're seeing a recovery already, which is the good news. As we exited April, we've been seeing sequential 10% week over week improvement in restaurant trends. And as we roll into the month of May, we're optimistic that that will continue to improve as states in the United States begin to relax some of the shelter-in-place orders, and we're seeing that across the globe in the other countries that we operate in within as well.
What I think that investors are also trying to understand is what does the economy look like? Do we ever get back to pre-COVID-19 world, or do you think that your business mix, your margin, your structural margin, your operating margins, your CapEx will be the same, or do they change, and how do you prep for that?
It's a great question. Let me just start with like a 4-part plan that we've implemented a part of this crisis, and then I'll directly answer the question about the longer term forecast. The first thing we needed to do was to ensure liquidity of the company, and that's we've succeeded in that regard for sure with the $6 billion of cash and liquidity that I described. Second is we needed to take dramatic expense out of the business, reducing our variable expenses to match the outbound customer demand. We communicated yesterday we've taken $500 million of cost out of our expenses in just Q4 alone. We're on a July 1 through June 30 financial calendar. And then the third is maximize business opportunities in the near term, which I spoke to on those retail opportunities. Fourth is what does the future look like? How do we prepare for a new business environment and climate? And how do we succeed in that climate? And we are actually accelerating strategic initiatives to enable us to succeed in that environment. Directly tied to your question, as I mentioned earlier, we do anticipate schools will go back to school. That's a big business for us. Restaurants will recover. The speed with which they recover is to be determined. We're prepared for it to take a long time. We hope that it happens earlier and faster than that. We believe the slowest recovery is actually going to be in our hospitality sector as business travel will be constrained, and we're planning for that as well. Two points that I'd like to communicate vis-a-vis Sysco and our financial health. We had roughly 16% market share pre-COVID, which is by far number one in the industry. So we have tremendous headroom to grow in a roughly $300 billion business. So even if that business were slightly smaller in the future, which we don't believe it will be, but if it were, we have tremendous upside potential. And even within the customers that we directly serve today, we have about 30% of their share of wallet. And the strategic initiatives that I was referring to, we believe will increase our penetration with existing customers. And again, we have the opportunity to grow top line profitably in a post-COVID environment.
In an immediate world, can you give me some insight into the protein world? Wendy's on their call right now talking about shifting their marketing focus to chicken because of the beef issues. Sort of where do you see the supply chain? Where do you see the food inflation? Where do you see the problems? Where the deflation?
Yeah, it's a great question. The protein space in particular, is under some strain at this point in time. What I would say is, we're open for business though across all lines of business, and we have access to product. We have redundancy in suppliers. We have strong business relationships with those suppliers, and we've not had specific or significant source of supply challenges. There have been reports in the industry, Wendy's, as you just described, Tyson as well, has gone pretty public about some challenges. What I would submit is that the challenges will be time-based and they will be specific product category based. There will be plenty of protein to be purchased in the grocery channel. There'll be plenty of protein to be purchased away from the home. There very well might be specific cuts of meat or specific product categories that for a short period of time have some supply challenges, but I'm confident that our manufacturing partners are operating in a safe manner. They're taking the precautions to protect their workforce, and they can ramp up their capacity pretty quickly. So I would say the challenges that we're seeing are going to be short duration and won't be endemic for the industry.
Final question for you, and we'll just have about a minute left, but what kind of restaurant am I going to be eating in 2 years?
That's a great question. What is clear is what's happening right now is that the fast food restaurants that have drive-thrus are performing much better than other type of restaurants. And that makes perfect sense, right? You can just pull up to the window, get your food and go. Those chains are doing quite well in comparison to the others. The hardest hit restaurant has been that locally owned small restaurant in your community. And we are working harder than ever before at Sysco to help those companies be successful. We've taught them how to apply for a CARES Act, keep their head above water financially. We're actually doing a campaign right now called #TakeOutToGiveBack to help support those local restaurants. Our hope is that the majority of them will be successful. I do think we'll see an increase in bankruptcies. There'll be a smaller number of independently owned small restaurants over a period of time, maybe a year to 18 months. What I would submit, though, is for the long term, there will be many of those people who get back into business, perhaps as a new restaurant in a new location, because people want to eat at that local restaurant. The trend pre-COVID was locally sourced, farm to table, someone that actually who owns the restaurant. And I do think for the long term, we're going to get back to equilibrium pre-COVID.